All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today we're going to be going over common misconceptions with the Simple Markets trading strategy. As many of you know, you can download the strategy on your screen right now in the description below. There'll be a link down there. It'll direct you to our website, and you can actually get this exact PDF that I'm showing here. But more importantly, before I dive into just any trading strategy, I like to show some credibility here, so we're going to hop over to the community. Now, prop firm statistics are shown to the public in some scenarios. My Forex funds in the past has shown theirs, and the stats actually show that less than 1% of traders make it to their first trading payout, and even worse, less than 5% of traders actually go on and get funded with a prop firm. So with those statistics, based on our current member count of 168, that would mean that roughly we have about 2 payouts, if not 1 payout in this community, based on that 1% statistic. And it does mean with that 5% value, we should have roughly 10 funded members. As you can see, that is obviously not the case here. Some of you may or may not know this as well, but there are other competitor communities in the smart money space. One of the communities has 2,000 members and 23 funded members, and the other one has 2,500 members and 36 funded members. These are actual statistics from the past of communities that our students have gone and joined before they came along and found us. It is absolutely ridiculous, that funding member ratio in these other communities out there. But more importantly, not only the funded members we have here, but the payout statistics, where every single day, just in the last week alone, we're seeing multiple payouts for member after member after member, clearly showing that yes, this strategy does work. Now we're going to start here with common misconception number 1, and that is, unfortunately, for some of you listening, it means that you cannot take this strategy, download it, and expect to be trading in the live markets next week, funded and profitable. That is unfortunately not the reality of this. Nobody is going to take a trading strategy and become profitable instantly. You have to backtest, practice, and master that strategy. Now, does that mean it has to take 6 months to a year? Of course not. We have students who get funded in 2 weeks to 4 weeks, but those who get funded quicker are typically the ones who right out the gate begin backtesting, practicing, and putting their full confidence in this strategy. And then the median amount of times that we personally find members getting funded, it's about 2 to 3 months, somewhere in that range. If you are going to take this strategy, you need to go and begin backtesting it, collecting data, sending your data to myself or one of the other 2 coaches, getting some feedback on your trades, and then making improvements. That is how you learn. That is how you progress. We are not a community where you sit down, watch some course content, and get right to it. That's not how this works. In fact, at the time of this recording, myself and the 2 coaches are working on a multi-tiered course content, where part of that course content is unlocked after you complete certain steps, or what we call coursework. And that type of tiered system with coursework allows for you to be held accountable, and for us on the back end to really turn you into a profitable trader. And then it allows our community to actually grow, and the amount of success within the community to grow as well. If you showed up to school one day and your teacher gave you coursework or homework and you said, no, I'm not going to do it, how do you think that teacher would react towards you? It's the same way when students join our community. We maybe give them some pointers and tips. We tell them they should backtest this year or this pair, see how they perform with our new advice, and then they end up not doing it. Unfortunately, those are the traders who will not see the success that they want from our community, or in fact, any trading community, because this is not an industry where it's going to favor people who do not put the work in, especially with such a low success rate. So to summarize, guys, make sure you're taking this strategy, you're putting your confidence in it, and you are backtesting and practicing yourself. And you can even leverage me. You can send me any message you want on Discord with your data. I will go over it. I'll look at your trade images. I'll give you some feedback, and I'll do that for free too. I'm not going to charge you to DM me on Discord. Now, the second misconception here, and this one is pretty important for those of you that are going to take it serious and start backtesting. This is the understanding that our strategy works on a very large watch list and not on a pair-by-pair basis. So what that means is when you are trading in a live market or even backtesting, your strategy is going to have a combination of many pairs working at one time to go and create that longer-term consistent edge that you are seeing here. Now, a great example of this, Coach Sven is actually going through in his webinars and doing backtesting from every single pair every year on 2016 to present date. He collects his data here within the community so people can look at the trade images and the data. And as you can see here, NZD/USD was a break-even year. He had a lot of good trades. He even had some good winners in here, 2 or 3 in a row, but still ended up 0% on the game. If you look at Pound AUD, for example, this pair was straight negative, 0% win rate with -4% losses. But keep in mind, in a live market, that's not how it would perform. Because in the same exact year, Euro NZD performed with 10% that year itself, Pound USD with another 8%, 18% alone wipes out all of those losing pairs that you may have seen previously and more, and that's what's going to give you that edge. So if you are backtesting, I highly recommend backtest 1 year of price action on all of the pairs in the watch list, as opposed to backtesting one pair for many years, then one other pair for many years, and then after 2 to 3 pairs, you're confused why your data might be worse than expected when you're not using a combination of all of them. Now over here to the third common misconception, and this is going to be range-based trading versus what some people would call order blocks, supply and demand. This is in fact not what we use our strategy for. We trade ranges here, which is, as you can see, from this low to this high. We break structure and we create a range. One soft rule that I use is when you throw that Fibonacci tool on there, if this 50% line on the Fib tool is anywhere above this break of structure, you are in a good place. Obviously for a sell, it would be the opposite. That kind of ratio there shows that a range is present. There's even a term I heard for it. I don't watch a lot of YouTube content, but a student mentioned it. I wish I could remember it for you guys, but it had something to do with the retracement and to the ratio of the expansion. If anybody does know a term for it, comment it down below. I'll pin it there in the comments. Now, these would be some examples of incorrect versions. Now, this here, there's many traders who they'll show me their backtesting when they start, where people try to enter this trade here because this is the assumed trading range that they are using. Kind of like we just talked about, that 50% is way above any type of break of structure that there is here. This, to me, instead of being a trading range, is more like an order block or some form of expansion that you went and threw the Fibonacci tool onto. Keep in mind we're trading ranges. This would be another great example of that. There's a break of structure to the downside here. The 50% is far beyond that at this point, and this is not a range with any type of trading ratio here compared to this one. Now, for full transparency, because I know people will ask about it, this trade I did take last week, and it was a break-even position, but nonetheless, I think it's a great example here to show 2 incorrect positions and 1 proper one. All right, now for another example here, I actually went to find a counterintuitive example because I feel this will help a lot of the hindsight traders out there. Now, this is number 4 on the list, and that is focusing on your most recent breaks of structure or your most recent trading ranges that follow all of the rules. It's another very common thing I see in backtesting data when I review it. This trading range here is the most recent break of structure that has a sweep on liquidity, a fair value gap, follows all the rules, a good candle close above the high, we set the fib, we enter, and we take a break even here. But something very common I see is a lot of students are far too zoomed out on their pair and they may be looking or waiting for something like this. Now notice here, this one does win, and I chose this on purpose because there is a lot of hindsight traders out there. Despite the fact that this won, this is the correct version that in the longer term, probabilistically speaking, will give you better returns. While these very huge ranges, they do work, it may be like a daily time frame, you are going to be significantly hurting your data and even your repetitions if you set these orders, don't adjust to current price action, and continuously wait for them to get tapped into. And I will repeat this again, I chose a winning trade here. Despite the fact that this trade would have won, it is not probabilistically correct in the longer term, because you will find long term that these types of trades, where they are very large ranges that you're holding for too long, will actually have a lower win rate compared to, I'll repeat the phrase again, the most recent trading range that follows all of your rules. It's a very common phrase you'll hear me say. I'm sure you've heard it in past videos as well, but it is a common misconception when backtesting, so keep an eye out for that and make sure you are properly taking your positions. All right, and that is going to be all for today's common misconceptions with our strategy. If you learned something today, please like the video. We're nearing 20,000 subscribers as well at the time of the recording, so subscribe to the channel if you have not already. We come out with multiple videos every single week, specifically on the simple market strategy. I'd love to see some of you guys join the community and start growing with all of us in the future, and especially towards the end of 2026. I appreciate everyone watching, and I will see you all in next Monday's video.